Welcome to today's show of Ask the Colorado Dream House Team. I'm your host, Dan Polimino, coming to you live from Denver, Colorado. I hope you're off to a good start today and enjoying the week. If you're new to the program, as always, this is all about real estate. We help you navigate the real estate business no matter what part of the country you may be in. So if you've got a question about buying, selling, or investing in real estate, and you're going to want to tune in right here every Tuesday and Thursday to get that information. As always, again, please leave your comments, questions, leave them here on Facebook. Call us at 720-446-6325. Email us at team@Colorado Dream House. We want to help you. We want to hear from you. And again, just would love you to participate if you've got a real estate related question. Two things we like to accomplish every week. We want to give you a little market information and we want to answer your questions. So let's go with market information. Stop me if you've heard this before. Dan, I would put my house on the market if I knew where I was going. Yeah, that's a problem in Denver. With inventory so low at 30-year lows, people would sell their homes, but they aren't sure where they would go or what would be available, if anything, that they may like. So what we hear is this: Dan, I will put my house on the market as soon as I find a replacement home, a home that I want to buy. And so we kind of start this process in reverse. It used to be we put your house up for sale, it went under contract, and we went and found a new home. Now what we're doing is we're finding a new home and then putting your house up for sale. And some of you may be saying, well, but Dan, that means that you have the money to buy the new house even though you haven't sold your house. Not necessarily. Let's just say you do need the equity and the money out of the sale of your house to purchase another house, right? What we can do is what's called a bridge loan. And basically it's a short-term loan of 3 to 6 months that's in addition to the loan that you're getting for your new home. And basically the bridge loan pulls the equity out of your home. Let's say you have $100,000 in equity. You need to sell the house. You're going to use that $100,000 as a down payment to purchase the new home. What the bridge loan is going to do is it's going to pull out that equity, that $100,000 out of the house. And they're going to give it to you in the form of cash. And then you're going to use that money as your down payment to go buy the new house. You'll close on the new house, you'll move into the new house, and then you'll put your old house up for sale once you're out. Once the old house goes under contract and is sold, you will pay back the bridge loan that you took out for the $100,000. It's that simple. I know a couple of lenders that specialize this. They'll not only finance the bridge loan, but they'll finance the new home. So if this sounds like this would be a great alternative for you, contact us so we can put you in touch with them and give you more information. But we find a lot of people going this route because they want to find the house that they're moving into first before they give up the one they're in now. All right? Make sense? Hope so. Questions? Dear Colorado Dream House Team, when building new, meaning a new home, on a vacant lot, how do you know how much money to spend on the construction of the home? Can we spend any amount we want? Well, yes, of course, you can spend any amount you want on the construction loan. However, you run the risk of devaluing the land. What do I mean by that? If you buy a piece of land, just the dirt, and the dirt is $500,000, you shouldn't spend $500,000 on the construction loan for a total of $1 million, because you're going to have a very difficult time reselling that property and recapturing the amount that the dirt cost you, the $500,000. So what you've done is if you've only spent $500,000 on the construction of the house, you've now devalued the land, and you're not going to get that money back when you go to resell. We like to tell people to use the 3 times rule. So if the land is $500,000, multiply that times 3. That would put us at $1.5 million. That means we spent $500,000 for the land and we spent $1 million on the construction loan. Now that's a scenario where we haven't devalued the land and we've built the right amount of house for the cost or the purchase of the land, right? And you can do this with anything. You buy a $300,000 lot, multiply it times 3. That means when the house is completed, you should be all in at $900,000. Okay? Otherwise, again, you run the risk of devaluing the land and never be able to recapture that money. Hope that makes sense. Dear Colorado Dream House team, when buying in a new subdivision, can you use any builder you want? Generally not. The way the subdivisions are planned and developed these days is that the master developer usually says who you can use as a builder. They might give you 3 options or 4 options or 8 options. In the case of what we were talking about a few weeks ago in Sterling Ranch, I think there's 8 different builders in there. And they've each got a variety of models, but they are the exclusive builders to Sterling Ranch, and you cannot bring in your own builder. And that's not the case in every subdivision. It's certainly not the case of what we call an infill lot. What is an infill lot? Well, let's just say you are driving through a subdivision that's been established for a long time and been closed out by the builder many years ago. And there just happens to be a vacant lot in there. That's what we call an infill lot. Maybe it's a cul-de-sac of 12 homes and one of the lots never got built on. And so you can go in and purchase that lot, and chances are you can bring any builder you want to the equation. All right? Dear Colorado Dream House team, I find it very confusing to follow the lending industry. Well, that makes 2 of us. Can you help us understand what loans are available to us? Well, sure. Any realtor like us or team of realtors that do this full time, that sell as many homes as we do in a calendar year, year in and year out, part of our job is to stay on top of all of the lending programs. And they're constantly changing. And each lender probably has a different program or a variety of different programs. So one person's got this special 1% down program, but the other person doesn't. And so you need to know who to go to for what your specific need is. I say, by all means, give us a call. We're talking to a dozen lenders at all times. I know of probably 24 different type of lending programs. And again, one of the things that we do that I think is valuable to our clients is we find you cheap money. We find you the best way to finance what it is exactly you want to do, and we'll put you in touch with that lender. Hope that helps. All right, last week on Thursday I told you we had about 5 properties coming to market in the next 8 days. Just on Friday we put a new property on the market. It is 955 Eudora Street, and it is condo 1804. But better yet, it's the penthouse on top of that building. It is the top floor penthouse with amazing views of Denver and downtown. And it's about 2,100 square feet, 2 bed, 2.5 bath. I think you're really going to like it. It's in a great location. Check it out, 955 Eudora Street. Go to our website, coloradodreamhouse.com/Eudora. This week we've got 4 more properties coming on the market. So again, if you're in one of those scenarios where, Dan, we just can't find anything, we keep looking, make sure you contact us at the Colorado Dream House team and find out what we've got coming on the market, because we're always bringing new properties to the market, and this week we just happen to be bringing 4 of them. So again, check in with us. Well, that's it for this week's show. We're going to be back on Thursday. I hope you have a great week and keep the questions coming. Thanks for tuning in, and we'll talk to you on Thursday.